Trades, and let's talk about the year that India has seen in terms of the reforms and in terms of the macroeconomic moves, because India's second quarter GDP growth has surprised many, reinforcing its position as the fastest growing major economy globally. A series of reform measures undertaken by the government in 2025 have played a pivotal role in this growth trajectory, and in this special edition we take a closer look at the key reform steps that have shaped India's economic momentum this year. Listen.
Amid global turmoil and tariff-related disruptions, the Indian economy has emerged as a bright spot for the world economy. Second quarter GDP growth has surprised many, cementing India's position as the fastest growing major economy in the world. Reform measures taken by the government in 2025 have played a pivotal role in the current growth trajectory. In this special edition, we bring you a detailed look at the reform measures taken by the government this year.
The year 2025 began with a big bang reform on the direct tax front. In a major relief to the middle class, the government announced sweeping changes in personal income taxation. The finance minister declared zero tax liability on income up to 12 lakh rupees under the new tax regime. For salary taxpayers, this threshold effectively rises to 12.75 lakh rupees with the benefit of a 75,000 rupees standard deduction.
There will be no income tax payable up to income of 12 lakh rupees. Tax rate structures as follows: 0 to 4 lakh rupees nil, 4.8 lakh rupees to 4 to 8 lakh rupees 5%, 8 to 12 lakh rupees 10%, 12 to 16 lakh rupees 15%, 16 to 20 lakh rupees 20%, 20 to 24 lakh rupees 25%, and above 24 lakh rupees 30%.
Following a sweeping overhaul of the direct taxes structure, the government has set the stage for big-ticket reforms in GST. Leading from the front, the Prime Minister made a landmark announcement from the rate fall.
Big bang GST reforms paved the way for a long-awaited rate rationalization. Acting on the centre's proposal, the GST Council approved a simplified two-rate structure, 5% and 18%. A special higher slab of 40% was introduced for sin goods and luxury items.
Common man items such as hair oil, toilet soap, bars, shampoos, toothbrushes, toothpaste, bicycles, tableware, kitchenware, and other household articles have all come to 5, whether they were in 18 or whether they were 12. Similarly, reduction of GST from 5% to nil. 5 से 0 में जाने वाले items indicate कर रहा हूँ. Ultra high temperature milk, the UHT milk, chena or paneer, all the Indian breads will see nil rate.
Implementing the reforms effectively was a major challenge for the government. The CBIC, through its extensive field formations, ensured that the benefits were passed on to consumers.
The finance minister herself closely monitored the rollout of the new GST structure. During the transition phase, prices of more than 52 essential items were tracked to assess whether businesses were passing on the tax benefits to end consumers, reinforcing the government's focus on compliance and transparency.
Now, I'm joined by Mr. Vivek Johri, former chairman CBIC. Mr. Johri, two-rate structure and the GST have been implemented since you have been at the helm of the CBIC and must have gone through the deliberations. Do you think that the next generation reforms on the GST are moving ahead in the right direction?
Yes, I think it was the direction of the reform was absolutely justified because, as you know, the more the number of rates, the more the chances of evasion and lack of clarity in the rate structure. So it is now well accepted that fewer rates in a tax structure make it easier for compliance as well as for clarity and certainty. So I think what the reform has done is to move in that direction. The next step, of course, and we don't know what time frame that would take, but the next step would be to, if possible, go down to a single rate structure. But generally speaking, it is the view of many commentators and experts that that is not perhaps feasible in the context of a developing country like India. So I think a two-rate structure is good enough. There are some anomalies that are created because of a two-rate structure, such as an inversion in rates, etc. Those have been addressed partially, through a quicker refund mechanism, which FM had promised and which has already been implemented now. But I'll talk a little more about what can be done to ease, the pain for businesses with regard to that. As far as the consumer is concerned, of course, it's a very welcome reform. And I think in a large swathe of products, particularly FMCG, there has been a big relief that has been offered to consumers. Automobiles is another example. So yes, from the point of view of taxpayers, it's definitely a relief. For businesses too, it is largely a relief because it has helped boost demand, particularly in the festive season, and it has given a boost to the economy. Therefore, but there are some anomalies that need to be addressed.
Well, some states are still raising concerns about potential revenue loss, though we do not have sufficient data to support that logic barring November month's GST collections. Mr. Johari, my question to you, if collections do not improve, do you think that the state governments should be given some sort of financial support?
See, it will depend on how revenues behave. So the first month, which is the peak of the festive season, revenues did very well. And we exceeded, 2 lakh crore. The second month after the reform, of course, the rate of growth in revenues has been somewhat tepid. So we need to wait and watch. And if we find that there is really, some sort of a dip in revenue which is beyond expected limits and which is not likely to be made up through, increase in demand or the boost it gives to consumption, then I do acknowledge that, some relief should be provided to state governments, particularly those that face acute, fall in the revenues.
One question on the implementation part. CBIC is still monitoring whether GST benefits are passed on to consumers. What more could be done to ensure effective implementation of GST rate reduction?
I think they're monitoring the situation, and like you said, they've laid out a very elaborate mechanism for field formations to keep watch on prices and to report back instances where it is found that the benefit has not been passed on. But I think it is only fair to make a point from the point of view of businesses. And there seems to be some lack of clarity, and I'm speaking on the basis of case law and jurisprudence that's already there, that businesses are facing with regard to anti-profiteering provisions in law. I think there is lack of clarity about whether, when there's a drop in the rate on a finished product, let's say a final consumer product, it could be some, item, it could be a food item, it could be anything else. And there is a rate inversion. What happens is typically there is accumulation of input tax credit, which businesses are not able to draw back fully. Now, as long as the inversion and the accumulation is on account of goods, there is already a mechanism to provide refund of the accumulated credit. There's no problem with that. And in fact, the government has taken a very welcome step by announcing a quicker refund mechanism, which has been put in place. But the fact remains that there is a lot of accumulation in such cases in respect of input services as well as capital goods also. And that accumulation gets aggravated when the rate of tax on the finished product is much lower than what it is on the inputs. Now, in the present rate structure, as you would be aware, inputs would attract a rate of tax of 18% and the finished product would attract 5%. Now, that's a huge differential. Now, even if the differential is refunded to the business entirely, there is further accumulation on account of services, which are all at 18, and capital goods, which are also at 18, which the businesses are left, with in their books of accounts. So I mean, it is difficult for them then to pass on the benefit entirely to the consumer. Otherwise, they have to absorb this cost on their own. To the extent they can, it's well and good, but it's not always possible. So I think there needs to be clarity about what is meant by passing on the benefit commensurately, which is the word used in law. And it would help all businesses, in keeping good accounts and in complying with this provision well, if, there is some clarification which the council or the government issue on whether it is to be done on gross basis or on net basis. So I think that is one thing that needs to be done further to improve implementation. I don't think businesses are shy of passing on the benefit, but it's just that there is some lack of clarity. And maybe in the short run, they're able to absorb the cost. But if this is a perpetual sort of gap in the rate structure, then they may not be able to absorb the costs on the medium term or long term basis. So that will become a big constraint for them, and it needs to be resolved quickly.
Before I let you go, Mr. Johri, allow me to ask one more question. We have come a long way. According to you, what could be the next set of reforms on the GST?
I think one single and major point that needs to be addressed if we really want to move into a pure and much more efficient GST is to remove the bottlenecks that are currently there in the flow of input tax credit. So, apart from specific restrictions in law on the availability of input tax credit to businesses, as I mentioned earlier in this discussion, because of inversion in rates of tax within goods, there is a problem of accumulated input tax credit with regard to services and capital goods. And I think the government needs to come up with some solution. Otherwise, in an ideal GST, each business is only an agency through which the tax moves. And eventually, the burden of the tax should fall on the consumer and not on the businesses. If you have bottlenecks in the input tax credit chain, then what it does effectively is to impose costs on businesses. They're not able to pass on or fully neutralize the input tax that they have paid on services, capital goods, etc., which they have acquired for carrying out their businesses. And so it becomes a cost to businesses. Unless they write it off in their books of accounts, they have to keep provisioning for it, and it adversely impacts their working capital availability. So I think this is a major problem that needs to be addressed. I see this as one of the issues which I'm certain the GST Council will take up in the short to medium term in future. The other thing which I think needs to be worked on is, and this is from the point of view of ease of doing business and ease of living. So large businesses that have a pan-national presence, that have registrations across the states or need registrations across the states, you see the business environment is also changing. There is greater emphasis on electronic commerce and quick commerce now. These are businesses that are growing at a phenomenal pace, across the country. They open branches very quickly in different parts of different cities, different parts of the country, etc.